From the Commissionerate of Collegiate Education, Andhra Pradesh, and welcome to you all for the today's session on cross-utilization of input tax credits under the GST topic. Myself, Vatsu Satish, lecturer in Commerce, SVSSC Government Degree College, Sulurpet, Andhra Pradesh. In this lecture, you will be able to understand what is meant by input tax credit and input tax credit mechanism, conditions to claim input tax credit, cross-utilization of input tax credit, etc. And what is input tax credit? The main intention behind the GST is the seamless flow of tax credits in all levels of supply chain. Previous indirect tax regime, there was a cascading effect, thereby the consumer will suffer more because of the cost of the product or cost of the goods is very high, because in the all our supply chain the tax has been imposed. Due to the situation, the manufacturer fixed the high cost on the different products and different supplies. And after introduction of GST, the government main intention is to reduce the cascading effect, also tax burden among the suppliers and the consumers. Here, input tax credit mechanism means at the time of paying tax on output, the taxpayer can reduce the amount of tax paid on input. This is called input tax credit. It means the difference between output tax and input tax. How this input tax credit mechanism works? A manufacturer purchases raw material from the suppliers. There are three different suppliers here, and the same raw material convert into finished goods, and those finished goods sell to the trader or wholesaler or final consumer. Here, for the purchases of raw material or inputs from the A supplier, he paid rupees 250 as a input tax, as same rupees 100 rupees as input tax for the B, and rupees 50 rupees as input tax to the C supplier. And then after converting raw material into finished goods, he sold that finished goods to trader or wholesaler or final consumer. For that, he claimed 500 rupees as output tax. Now, in this scenario, what is the input tax credit here? The input tax credit is the difference between output tax and input tax. Here, 500 is the output tax that is claimed by the supplier or claimed by the manufacturer from the consumer or retailer or wholesaler or trader, and then deduct those tax paid amount that is paid on inputs, that is 250 rupees minus 100 rupees and also minus 50 rupees. Total it cost around how much? 400 rupees. The remaining balance is input tax credit. So how this tax credit utilized? So before previous lecture, you might understand the time of supply of goods and services. There, supplier can able to know the time when GST liability has to pay. Now, after the paying the GST liability, he can set off the GST liability on different taxes or against different taxes. Or he can carry forward those excess paid tax to the next payment period. Now, how this mechanism will work out here? Since GST law allows to the taxpayer utilization of tax credit of one tax against the paying the other taxes in different situation. In previous indirect regime also, there was a utilization of tax credit like central and sales tax utilized for the payment of the value added tax, but it was not worked out properly. So that is the reason there was a too much cascading effects on the taxpayer. Now the government do lot of background accounting to keep the accounts of CGST, SGST and IGST straight and compute the respective accounts after making the payments. Section 9 of the IGST Act reveals the provision of how the government work out the respective account and transfer balance amount on against the other taxes on the basis of returns submitted by the taxpayer or suppliers. Order of utilization of credits. As you know, if for different suppliers there are different taxes. If it is interstate, then IGST is applied. If it is intrastate, CGST and SGST is applied. But how this utilization of credit will happen in order wise means the input tax rate amount of IGST is allowed to utilize the payment of IGST, CGST and finally SGST or UGST. The ITC amount of CGST is allowed to utilize on the payment of CGST first and then IGST. Then same time SGST allowed to utilize the payment on SGST and SGST. CGST cannot be allowed to utilize the payment against the SGST. At the same time, SGST cannot be allowed to utilize the payment against the SGST, CGST liabilities. So, utilization of ITC of CGST against the payment of IGST. Now, ITC of input tax rate of CGST used for the payment of IGST by the registered taxable person or by the registered supplier. The government has to receive the amount that equal to CGST, then it can be utilized. The government is required to the transfer of fund from CGST amount to IGST account, that is amount equivalent to the payment against the IGST. And both the CGST and IGST our accounts are maintained by the central government. The balance in the different accounts should be maintained separately. So there is no way to maintain one account for the CGST and IGST. There should be separate accounts maintained by the central government. Utilization of input tax rates of SGST against the payment of IGST. ITC of SGST used for the payment of IGST by the registered taxable person. First, the government has to receive the amount that equivalent to SGST, then it can be utilized. If there is no excess, if there is no amount of SGST, then it won't be utilized. Or if it is excess amount, then it would be carried forward to the next payment or next utilization process, etc. So state government is required to transfer of funds from SGST account to IGST account. That is, the amount is equivalent to the payment against the IGST. So here the SGST amount has to be kept in SGST account and the same account amount should be utilized for the payment against the IGST. Both the SGST and IGST accounts are maintained by the state and central government and the balance of different accounts should be maintained separately. Utilization of ITC of in IGST against the payment CGST. The government has to receive the amount that equal to IGST amount, then it can be utilized. Central government is required to transfer funds from IGST account to CGST account, that is the amount is equivalent to the payment of against the CGST. Both CGST and IGST accounts are maintained by the central government. Then balancing different accounts should be maintained separately. So as like same IGST against the payment of IGST also, the same structure should be followed. And how the CGST amount calculated, and then how it would be utilized for the against the different taxes. Now you can collect, first step is collection of taxes from the intra-state suppliers and add any IGST amount for the payment of CGST, and also add any IGST from interstate suppliers or imposed to an unregistered person or composite taxable person, and finally you deduct the amount transferred from CGST account to the IGST account on the payment of IGST. The remaining amount is nothing but that CGST account. If it is excess amount are there, then it is go for the next time slab, or it can be utilized for the paying the different taxes, or the taxpayer has able to get the refund also. So three cases: one, it can carry forward, or it can set off against other tax payments, or it can refund to the suppliers. Same IGST account, is SGST account. SGST from interstate suppliers. Here SGST is taxable on interstate supply that is happened within the state. The amount would be collected and computed how much amount collected for the taxable period, and then the transfer from IGST for the payment of SGST, and then SGST component of IGST from interstate suppliers or imports to unregistered person or composite taxable person, and deduct transfers from SGST payment of IGST, and remaining amount should be carried forward or set up against some other taxes, or can they take refund. That depends upon the taxable person. And calculation of amount required for payment of IGST account. So IGST collected from the interstate suppliers and transfer from CGST for the payment of IGST, we will have to add it. Also SGST for the payment IGST, and less IGST account to the payment of CGST and SGST. Also less the components of SGST from interstate suppliers are input to unregistered person or composite taxable person, and less transfer from SGST for the payment of IGST. Then cross utilization of input tax rate among central and state government. Here the input tax rate of IGST, integrated goods and services tax, allowed to payment of IGST first, CGST, and finally SGST. The ITS of CGST allowed the payment of CGST and then IGST. The same way SGST allowed to payment of SGST and IGST. Here CGST is not allowed, as we know that, as I discussed previous slides. So CGST or SGST cannot be allowed to pay each other. So hope you understand the concept of input tax credit and how this cross utilization of input tax credit happened on the supply of goods and services. Thank you.